get some SMT there, which is nice. And we'll see if we can displace. Obviously, if you're forming an inefficiency in here, I might take that short, targeting this imbalance. So here's the SMT. Let me mark everything out properly first. We do have an inefficiency forming. Also have this order block, the inversion on the 5-minute, change in state as well. And you have potential SIBI here forming. So actually, right off the bat, we may have a short entry. It wouldn't be terrible. We have all this low resistance liquidity here. If we put in the relative equal lows with this, I would think that's pretty high quality draw. From the order block, I would like to enter from. So tap the order block. We put in those relative equal lows down here, which is nice. We got the sell side, and then obviously this internal range fair value gap here. I guess there's two things you have to look at. There's always a change in state of delivery on a retracement leg. So determining whether this is a retracement leg or an inefficiency or a reversal will be categorized by how hard we displace to the sell side, right? So if we form inefficiencies that are clearly being left open, like breakaway gaps, measuring gaps, just displacement, instead of it kind of lethargically moving lower and filling it quickly, then moving lower, then filling it a lot, then moving lower, then filling it a lot. That's not normally characteristic of a market reversal. Like think about what you saw with the 2022. It just reverses and then boom, it just goes quickly. So the way you can categorize retracements is by looking at on every single like down leg, if we're moving lower, does it just immediately refill that imbalance? Something like this, it kind of filled it back and forth, but we did leave some of it unfilled with candle bodies, which is something I'm looking at. We also did just run the sell side tap into the 15-minute inefficiency there. But I'm looking at discount of the dealing range, which would be from London session to current high. Premium to discount would be right around lunch, in between Asian and London high. But that's discount in case we wanted to drop there. The order block that we'd be referring to would be on the hourly chart probably. Yeah, right around the 3 a.m. order block. But we've been holding the bearish order flow really well. And I would like to see some sort of a measuring gap or breakaway gap form as we're leaving this area of consolidation. You can see the 5-minute structure is holding really well. And I do want to see this BISI tagged here and the even discount of the range, which is slightly further than the premium end of this imbalance here. Entry before the macro time as expected, and just trading towards the bias as soon as we got everything in line. Obviously this 1 minute just run through. There we go. So I'll send the trade execution, but this is where you could see a short-term bounce back into premium. But this, like, if we can leave some of this open, which I don't think we will be able to, but if we can leave some of this open, that would be a good indication we're starting to reverse. But look how 930 failed to manipulate above here. And we're now disrespecting some bearish PD arrays with pretty large expansion. No inefficiencies up in here. Look how, so remember I was talking about the retracement leg. If it's a retracement, normally you'll fail to see any displacement through where there's just gaps being left open. Notice how here, this is not a retracement leg. This is just an expansion. But in here, if this was a reversal, I can't speak, there would be 5-minute SIBIs forming. Look how we open, wick around, open, wick around, open, completely refill that gap, come back down, open, fill that gap again. And then now, what do we see? Quick expansion away. So to me, this looks like a retracement leg possibly down into this inefficiency. And we're going to start to reverse during macro time, back up into the relative equal highs. And if we have external range liquidity, we don't. Unmitigated fair value gap in premium on the 15-minute chart would be the next draw. The macro can either reverse or continue. It's the two functions. Okay. How do you distinguish between the two? Well, if 930 created a strong market reversal where it's left something jagged, and there's a reason for us to form an open high low close, then you'll have a macro continuation towards the drawn liquidity. If 930 fails to form any meaningful manipulation without SMT, then you look for the macro to reverse and then purge into 10:30 to 11 o'clock. It's always going to be into 10:30 and 11. What am I potentially looking for? Well, 930 failed to manipulate in here. We do have SMT on the lows, that on the higher time frame, which is what I was favoring. I don't like this tiny little SMT there. Larger SMT here with the 845 low. It's not a data low, but just notice how we're expanding up from here. We're expanding away from this inefficiency. We disrespected bearish PD arrays on the way up, and we left relative equal highs up here. So I think it's possible now that the macro will reverse, create an entry opportunity back up. So we have a potential 1 minute breaker forming in there. So look how the macro time created the reversal function. Let me turn this off now. Create the reversal. Are we likely to see a reversal after that? No. Your profile is open, low, high, close. In this case, 930 open is here. So once we start expanding past this buy side, now we'll seek further premium. So if you go back to the hourly chart, you have this inefficiency next. Really, you could be looking for right here. There's your 930 liquidity pierced. 956 would be a valid entry. Why? Because we now are trading within a breaker. So we don't need to see discount run. Right? We have a bullish breaker outlined here. CISD. So then that would be a valid entry opportunity long if you're looking at this for value up there. And we're flipping this as inversion. So your order, by the way, if you're looking at reversals in price, the way you want to be looking at reversals is just kind of steps to it, right? So you'll have the turtle soup, obviously. You'll have a short-term change in the state of delivery, which I'm looking at this very bottom range. So if we're bullish, this very, very last down closing candle, okay, will serve as a change in the state of delivery, right? Like if you just have move your chart all the way to like here, and that's all you saw. Say we're just trending up and there's your down closing candle. See how now it kind of serves as once you close above it, the candle buyers are now staying within that CISD. So that's your first change in the state of delivery. That's why it's change in state of delivery technically has two purposes. This one, then the secondary function is the breaker, which is the actual closure through a bearish order block. So two change in states. So turtle soup, then CISD, then normally you have an inversion fair value gap that is traded through. Then you have a breaker that's traded to. And then obviously you have everything else after that. But like in the order of when they form, if you're looking for a reversal, it goes turtle soup, CISD at the low end, then an inversion fair value gap, then a breaker. So I want you to notice between these two legs, if you split this market maker buy model in half, right at the turtle soup, look at how many fair value gaps here was completely filled or how many we formed. So starting from this point, how many fair value gaps do we have? SIBIs, specifically SIBIs. If we're bearish, you're always going to be looking at those SIBIs. We have 1, we have 2, and we have 3. Okay? 3. Out of those, how many were instantly mitigated? 1 in here. The candle bodies were closing below, which is actually a good sign. And here, we instantly mitigated that. Here, we left it open. Then on this side, how many fair value gaps were formed and just completely left open as well? You have 1, you have 2, barely touched there. You have 3, you have 4, and you have 5 already on this range. And notice how we're just kind of forming them, failing to have any retracement back in. Here, we're just slightly dipping into it and then running away. So this should show you where's the energy in the market. Well, the energy in this case is to the upside. So this is how a retracement looks. This is how a reversal looks. And reversal will normally have expansion after. So we had a bearish bias, and I was looking for at least discount of the dealing range. You'll still have an open to low, then the high close. Does that make sense? So now we were trading, or at least me personally, I was trading this part of the leg. And now others are probably going to be trading this part of the leg, which normally you do want to be trading this expansion, right? Because that's going to be the one that's going to have the most energy and it's going to be time-based and all the other stuff that you normally have learned. But that doesn't mean that you can still trade. You can't still trade this range. If you think about it, a daily profile, both sides of the market have to go. Sell side and buy side have to go. We have to return into premium and discount. It's not going to just go to premium and then premium. So if your bias is, okay, I'm still thinking it's going to return into lower prices, then you trade that first leg. That's why on 8:30 news days, especially, right when I started the stream, I mentioned 8:30 news profile. You have allowance to trade between, at least for me personally, I have an allowance to trade between 9:30 and 10 o'clock. I don't have to just get a macro entry, which normally is the thing that keeps me safe, and it gets me out of these kind of sloppy Judah swings. Obviously the expansion in this case is still within the macro time. You could probably still reach it up into 10:30, maybe into the new week opening gap. We still have about 15 minutes left till the expansion should be done. But obviously it doesn't matter where on the price we form the high. It has to reach into either a 15-minute or 60-minute PD array. And normally it's going to be between 10:30 and 11 o'clock. It's going to be that end cycle. So if we reach into the hourly gap, that's fine. If we reach into this new week opening gap, that's one thing. If it just completely disrespects the new week opening and keeps going higher, that's why just timing it will be important. It's time first, then price. Yeah, I would like if we got something like that. But notice how there's no inefficiency next to this order block. See? It's pretty clean. We have this one in here, but it was completely mitigated, and now we're leaving it. We took out this short-term high. So preferably now this fair value gap and really this order block wouldn't be reached into a secondary time unless we were tracing back into a discount. Look what time we're reaching up into this. Isn't this just beautiful? Time and price. New week opening gap reached right at 10:30. So there's your entire morning session. Extremely textbook. Open, low, into a discount, in a fair value gap, back up to the high close in the expected time window. Macro serving as a reversal and giving us a breaker entry, which I did not utilize today. Decided to go short off the inefficiency here into the relative equal lows, and it's the inefficiency in here. But I appreciate you guys joining. We'll wrap it up here. Definitely a longer stream today, I think. Yeah, hopefully you got something out of it, both psychologically, risk management wise, and tape reading. Hopefully I can see you guys tomorrow based on a good day. I'll decide if we want to stream or not. I'll send out a ping as usual. So journal, do the work that's necessary to succeed. Don't hold yourself short. Get outside and enjoy it if you can. Do the things that really matter. And I'll catch you guys soon. Peace.